good morning, fellow traders, and welcome to today's live trading session. As you know, today is November 27th, 2023. We're coming close to the end of another month, and it seems like we haven't been on these webinars or these meetings for a while, but it's good to be back. I know we're heading to the close of the year. So it's going to be interesting to see how the market moves, but typically we'll see a strong move before things actually die down completely. But that's what we're expecting. That's what we're hoping. But for the most part, we're still looking at these markets. We're still trying to find some high probability trade opportunities. I know we entered one last night that it pushed up, but it seems like it's not going to reach our target. I know I may talk about that later, but we're currently in a CAD yen buy. Out of all the pairs we decided to trade when it comes to yen crosses, we decided to trade the CAD yen, which wasn't the best one. We should have chose the other ones, but for the most part, all is well, all is good. We're at break even, so the price snaps back, we'll be stopped at break even. But for the most part, what we're going to do is look at these charts. We're going to try to identify some momentum plays, and in all honesty, I couldn't really find much this morning. I just found maybe like one or two, and I'm just going to talk about those this morning. But yeah, let's move on. So the first pair we're going to talk about is the pound USD, and we're currently looking at the 1 hour chart, and it's pretty apparent. Order flow and the bias of this currency pair is to the upside. It doesn't take a rocket scientist to figure that out. Price has been moving up. So we want to stay on the side of momentum. Whenever we trade these momentum plays, we always want to trade in favor of momentum. So then what we see a bullish bias on the 1 hour chart. It's apparently making higher highs and higher lows. If you go to the 4 hour chart, you pretty much see the same thing. Price is pushing up, making higher highs, higher lows. We're definitely in a bullish environment. And even on the daily, you can see it as well. But we can see here that we are testing this area of structure right here. So eventually we should see a rotation or some type of correction form. But for the most part, we have a bullish bias. We want to look primarily for opportunities to buy. That's what we're primarily looking for right now, because all the order flow, all the bias is pointing to the upside. US dollar weakness. That's what's driving a lot of this price movement for this particular pair and for all US denominated and US dollar based pairs. But we see price pushing to the upside. So what we want to do is look for opportunities to buy on a pullback to an area of demand. So in our case, we want to identify where this zone of demand is, and we could look at our charts and we could say, hey, the zone of demand is right around here. In this area right here, this is where we see buyers come in and create this move to the upside. So what I'm going to do is simply wait for price to come to this area of 1 hour demand, and then from there I'll look to see if there's a good opportunity to buy. A key to trading is to wait for price to hit 1 hour demand on pound USD, and let's just say you're looking at the dollar, because it's always important to look at the Dixie. And for the Dixie, you want to make sure price is hitting supply. So then when price hits demand on the pair, look at the Dixie or the US dollar index or the US dollar equally weighted index. Look for price to reach supply, which is really this whole area right here, this whole zone or area. And if price is in a zone or in this zone of supply, right around the same time when price hits demand on the pair, then that's a good sign that, hey, this could be a good decision. Let's look to buy pound USD. So those are just different things you can look at. It's always important to look at certain assets or certain instruments that are correlated with what you're trading. So in this case, we're trading a pound USD. We look at the Dixie. We can even look at the US dollar equally weighted index and look at that as well and see if that hits supply. And if it does, then we want to look for opportunities to short. But yeah, that's pretty much it for the most part. We will be looking to buy. But yeah, good morning, everyone. I know I forgot to say respond. So yeah, good morning, Brandon. Good morning, Adam. Good day to you, Joe. And good morning to you, Little Boots. But yeah, thanks for coming. John. Yeah, John. Yeah, I don't know. He wanted me to say that. But all right. So then yeah, we talked about the pound USD. And yeah, we're looking for an opportunity to buy on that particular asset. So again, we'll be waiting for this pullback to form right here. We'll be waiting for price to pull back. And then as soon as that happens, we'll be, of course, looking at the Dixie to see if that's testing supply at the same time. And then from there, we'll look for our opportunity to buy. You can wait for bullish confirmation if you want, or you can just be more riskier or have some level of risk appetite and just enter a buy. Just make sure you have your stop wide enough or far enough so that you can absorb any drawdown. But yeah, we're looking to buy. This is pound USD. Waiting for the pullback, looking to buy at this area of demand. So yeah, are there any questions about pound USD? Or any question in particular? Yeah, I guess, I can go on and just talk about the pound USD. Good morning, everyone. This is me, Marvin. And I'll just briefly say that the pound USD, a lot of this lift is kind of surprising. We know that before there was talks of recession, there was talks of seeing, inflation really disinflation pick up in the UK economy. And there was talks of there possibly being a signal sent by the central bank, by the Bank of England, that the UK economy is in recession. And, I believe they are. If you look at certain data points, they could be. It's just not coming through fully in the economic data. But as you can see, the sterling, the pound has been rallying due to just growth estimates actually not being as bad as many analysts had anticipated. It could be due to overshooting or pretty much underwhelming or undershooting when it comes to growth in the UK, simply because we saw the impact of inflation and other things, other indicators showing signs of slowing growth. But the UK economy still remains pretty resilient, and that's what's adding to the lift in the sterling. But a part of this lift is also, I would say a part of this rally is also due to the US dollar weakness. The US dollar is selling off for today as treasury yields soften, and we're seeing the pound USD hold up, even in an environment where it seems as if for this Monday morning, we're seeing a little bit of risk aversion play out in the market. But even in the midst of that, we're seeing pound USD rally to the upside. So I just kind of wanted to mention that. So we're looking for a buy, just like Melvin highlighted on the chart. Yeah. All right. So before we go to the next pair, what I want to do is cover the CAD yen. Like I know I just saw that we just got stopped out at break even. Which is okay. I know we probably should have closed out a bit earlier for this one, but for some reason, I just have this funny feeling that as soon as price stops us out, it's going to head higher. I just have that funny feeling. But, we can see here that price did push up, found some resistance in this area of really imbalance right here, because we clearly see that this was an area of imbalance. Right around here. So of course, we could have closed out, right around here, but I decided just to shoot for a bigger target since we had a more wider stop. I think my mistake with this particular trade was having a wider stop than what I should have had, because we could have had our stop really more, a little bit slightly below this zone right here. And that would have been a little bit better, having a stop like that, because If that was the case, then I could go for something like, like this and still come out with at least a 1-to-1. But of course, it didn't happen the way we wanted it to happen. While I was deciding on what pair to trade, I decided to trade CAD yen, even though we could have traded Aussie yen, pound yen, and all of them pushed and did exactly what we needed it to do around the same time. But the Aussie yen and CAD yen, Aussie yen and pound yen really gave us a nice move to the upside. Let me just show you. And, sometimes you look back and you're like, man, I should have chose Aussie yen, but it's all good. But we can see here that the Aussie yen came down around the same time we saw this push up. So we was thinking about buying Aussie yen, but I didn't want that double yen exposure. But I should have done it. I should not have been so overly conservative. But we can see here that for the Aussie yen, price would have hit its target right up here at these highs, and it would have ended up being a good trade. And the same with pound yen as well. That was one that we was looking at as well, where right around here, around the same time, price was testing this demand, and we saw price push up, and it would have definitely hit its target, right around here, in this area. So yeah, of course, that happens. That's a part of trading. Making decisions. You have to be okay with whatever result happens with whatever you decide to do. And in this case, we decided to trade the CAD yen instead of the pound yen, Aussie yen, and it didn't quite work out for us like we wanted, but all is good. But anyways, let's go and talk about the next pair we're going to look at, which is the Kiwi USD, NZD USD, NZD USD. All right. And this is very similar to the pound USD. We're simply looking for an opportunity to buy Kiwi USD. And the reason why is pretty obvious. It's obvious that overflow and bias is to the upside. And I believe we see this bias on multiple time frames. We can go up to the 4-hour chart. We see that we're in a bullish environment and that order flow is to the upside on the 4-hour. And really, that's all you need. If you're trading the 1-hour time frame, then you just need to make sure that the 4-hour higher time frame, or that the 4-hour chart is also bullish as well, or has a bullish bias. But in this case, we see the 4-hour is bullish. Daily, I believe, is bullish as well. Yep, daily is bullish. So then we're very much bullish on this particular asset until things shift and change. So yeah, in this case, we want to look for buy opportunities. So what are we going to do? We're going to simply wait for price to come to us. We're not going to chase a trade. We're going to wait for the trade to come to us. And that could happen real soon. Because if you drop out your waves, which I could do, but we can look at these anchor points and we can identify when price makes certain moves. So in this case, we had price make this low right here and then pushed up, made this, made this high right there, and then it came all the way down, made an equal low, and then it pushed up and formed a slightly higher high, and then went down. But you guys get the point. So we're in a bullish environment. But the reason why I want to say that is because you can look at these two anchor points right here, and you can say, hey, there's a possibility that price may respond to this zone and region. So we have this structure right here, these pivots, these anchor points right here that can act as a zone of support. We also have this hesitation candle right here, which can act as an area of demand. So we have confluence in this area. So then what we can't assume is that somewhere right in this particular zone, anywhere in this zone, is where we could see the buyers come in at. So That's what we're going to wait for. We're going to wait for price to come to us. We're going to wait for the buyers to step in, and we're going to look for opportunities to buy on bullish confirmation, or once everything aligns. And you can do the same thing that we talked about with the pound, where you look at the dollar and you see if the dollar is testing supply at the same time that the Kiwi USD is testing demand. So that can help you out a lot. But yeah, we're going to wait for price to correct into this zone and then look for an opportunity to buy and ride it out. So it's just that simple. Not rocket science at all. It's not difficult at all. It's just you looking at the charts, understanding order flow and bias, and waiting for price to get to an important area of value, which is really supply and demand. Figuring out where the orders are and then placing orders around those zones. So yeah. But yeah, this is Kiwi USD. Are there any questions about this particular asset or pair? Going once, going twice. All right. So yeah, I don't think we have anything else on our radar. So what I'm going to do is pass the mic to Marvin, and I guess he's going to go over a little bit of the fundamental stuff, and then yeah, we'll see if we can identify some also top down stuff later on, or we may look at the Nasdaq and the Dow. So yeah, we'll definitely look at that. Yeah, okay. So you guys know that this is Cyber Monday, which is the first Monday after the Thanksgiving holiday, and really news and headlines surrounding Cyber Monday is really going to fuel a lot of the price action for today, because Mondays are typically slower. But as we follow the headlines and the reports of how much consumer activity is taking place, that's going to definitely affect sentiment on this Monday, especially for U.S. markets. We're definitely going to see that impact the price of assets. And the reason why we're focusing on this Cyber Monday is because what we saw during Black Friday. Black Friday, we saw a pickup and shopping. It seemed as if for some reason, even though we're in the midst of high inflation, this high interest rate environment, consumers are still willing to go out, pull out the credit card and make purchases. So then we saw a pickup in Black Friday shopping, I think by 2.5 or 2.6% from the previous year. And there's this expectation that we'll see even probably a more profound number or more significant number for Cyber Monday, as just consumers try to look for those deals and those sales, among retailers. But for this day, especially for this week is going to be a pretty I would say active week. The first half of the week won't be as active as the latter half of the week. We only got a few data prints to come out. Like, of course, we have building permits. I think builder permits may have already come out. And then we have new home sales for today. But there's not really much that's going to come out ahead of really Wednesday and Thursday. So really the latter half of the week, we should see volatility pick up. And we should see a lot of price movements as these important economic indicators are released. But for today, what I want to talk about for today, and I kind of briefly mentioned it when we talked about the pound USD, and we can even say the same thing for the New Zealand over US dollar. Today is really a day of US dollar weakness. We could see the dollar weakening in comparison to the Kiwi or the New Zealand dollar, and the New Zealand dollar rallying to the upside. And actually, the New Zealand dollar is one of the stronger currencies for today. The antipodean currencies are some of the strongest. And what I'm going to do, I'm going to do something that I haven't done in the group for a while. I know some of you guys have seen me post that multi-currency index, that gold multi-currency index, where we measure the value of each currency based on its relation to gold. Since gold is pretty much a value, an asset that isn't really, it's primarily moves by supply and demand. And there's not too many variables that affect gold outside of supply and demand and interest rates. And since so then since that's the case, we can really find a true value of certain currencies based on its relationship to gold. So then what I want to do, I want to do this real quickly. I want to go to XAUUSD, and yeah, I think I saw that trade from Jason. He entered a trade. Like, I think Melvin wants to say something real quick. Okay, yeah, well, yeah, I don't know. I thought he wanted to say something, but okay, we're on XAUUSD. This is the 1 hour. I want to go to the line chart, and I'm going to change the template to our gold multi-currency index right here. And then what I'm going to do this. Let me see. I'm going to do the labels so we can see which currencies are leading. Now, this is on the 1 hour, but I'm thinking about moving it lower to maybe like the 5-minute chart, so we can just have a just kind of like a solid idea of what currencies are the strongest. So then, since we're looking at these currencies relative to gold, and since the currencies are the counter currency in this pair, this gold pairing that we see plotted on this chart, like the currency that's pretty much the lowest, that is, has fallen or is not rallying the as much, or the one that's pretty much in the bottom of the spectrum, is the strongest currency for the session, and the currency that is listed at the top is the weakest currency for the session, since the value of pound gold, or I'm sorry, XAU over CAD, gold priced in Canadian dollars, is higher, much higher than gold priced in Japanese yen. So then, since the price of gold priced in Canadian dollar is higher, it's safe to assume that the Canadian dollar is weakening, or is the weaker currency for the session. So then you can take it from, weak being the weakest, being at the top among the majors, down to the strongest. And as you can see, the 3 strongest currencies for today are the Japanese yen, the Australian dollar, and the New Zealand dollar. While the weakest currency for today, right now, is the Canadian dollar, the US dollar, and the euro. Now, I know Melvin, he just mentioned about the Canadian, our CAD-yen trade, and how we have our stop at break even. We executed a buy last night. We should have picked another yen cross, but the Canadian dollar is struggling due to what we see happening in crude oil. We see crude oil falling. So then let me just do this real quick. I want to have you guys have, just a snapshot of this. I wish I could take a picture of this, but let me just go to this side right here, and let me pull up US oil. And let me just go to the daily chart. Right now, we're seeing a pickup in US oil, so hopefully that helps the trade. But as you can see, oil has been weakening and tumbling for some sessions. It's been selling off due to a combination of things, due to a combination of markets or nations pricing in lower growth, lower demand for oil for 2024. So we've been seeing oil prices slide as a result of that. But also, we haven't seen the impact of those production cuts, weigh in and actually have an impact on the price of crude oil. And from what we've been hearing, there's been, the reason why there's been a postponement of the OPEC plus meeting for a few days, because it was supposed to start last night or yesterday. We saw a postponement of the OPEC meeting simply because the House of Saud, Saudi Arabia, was pretty upset that some of the other OPEC countries and allies weren't really committing to their production cuts, because of course, a few months ago, they agreed to raising production cuts to 3 million barrels per day, or cutting oil production by 3 million barrels per day. And what we've seen now is that there's only been a cut in oil production to 2 million barrels per day, which means that certain nations aren't holding up their end of the bargain, like some of the African nations, African oil producers. And I think, even though the U.S. is not an OPEC nation, which is interesting, the U.S. is sort of like an island on its own. They're not a part of that oil cartel, OPEC exporting country. They are oil exporting country, but they're not following what OPEC is doing. They pretty much operate on their own. But the U.S. has been also picking up oil production and ramping up oil production. So then that's sort of working against some of the OPEC's desires to keep oil prices high in the midst of like front running lower demand later on in 2024. So then they're going to be meeting on Thursday to talk about making sure these countries commit to their prior agreement of, making sure there's a total of 3 million barrels of oil cut per day. But also they're going to talk about possibly extending those production cuts into the first quarter of 2024. So then that's pretty much what the oil markets are sort of concerned about. How is this meeting going to play out? We see oil, selling off, but it seems as if right now for this daily candle, it wants to pair some of those losses and it wants to move higher. And this is having an impact on the Canadian dollar, because even if we look at, I'm just going to pull up the loonie right here, the loonie equally weighted index, we see the loonie also red for the day. It's been selling off due to that pressure in oil. You can see that there's almost a correlation between oil. I know I don't have it on here, but let me just see if I can plot it. There's like a correlation between oil and let me just do this real quick. Okay, but it's okay. So this orange line is oil, and the candlesticks are, is the price of the Canadian dollar. And as you can see, there's a tight correlation between oil and the Canadian dollar. So then you can see how the Canadian dollar really trades at the mercy of oil. Whatever oil is doing, the Canadian dollar is probably going to follow suit, since they're an oil producing economy, and a lot of their growth in GDP and revenue is generated from oil. It's pretty much expected or pretty apparent why we see this correlation take place. But the Canadian dollar is selling off, is one of the weaker currencies for today, not the weakest, but one of the weaker ones. And we can see that the Japanese yen, is the strongest. So we're in this environment of risk aversion, or traditional risk aversion, where we see a lot of our safe havens benefiting, like the bond, like the Japanese yen as a safe haven, the preferred safe haven currency is benefiting. We see a rotation into the bond market when we look at treasury yields, but also when we look at gold in general. So then what I want to do here, I want to just pull up gold in general, and you can see how gold has been, moving to the upside for the session. You can see gold picking up. Let me just move this oil so you guys won't get confused. Usually there's an inverse correlation. That's one thing you have to keep in mind too. Usually there's an inverse correlation between gold and oil. Usually oil tends to rally in environments of risk appetite. Whenever there's talk of global demand and economic expansion and productivity picking up, then you'll see oil tend to rally to the upside. But then we've been seeing signs of slowing growth in the economy. And so then, we're in this cycle or phase where we're seeing oil prices sell off on expectations of slower growth and lower aggregate demand when it comes to, crude oil globally. So then, so then, so stock markets have been somewhat, weak as a result of that. But as you can see, gold has been rallying to the upside. It's been rallying, and it seems as if right now traders prefer to rotate into the safe haven ahead of the OPEC meeting, but also ahead of certain other announcements coming out later in the week. This week is going to be primarily about inflation. We have Eurozone inflation, flash inflation figures coming out on Thursday. And we also have the US core PCE, personal consumption expenditure data, which is the Fed's preferred inflation gauge, come out on Thursday as well. So Thursday is going to be a very eventful day because we have a lot of data points coming out. And then at the end of the week, which is Friday, December 1st, we're going to have, I think, ISM manufacturing PMIs come out, and I think something else, but I can't quite remember. But that's our first day of December. So then towards the end of this week, we're going to see some of those month-end rebalancing flows, month-end portfolio rebalancing take place, and even possibly some repatriation of the US dollar, since we've been seeing the US dollar also, sell off. We'll see that impact markets as well. But yeah, that's pretty much it. I don't want to just bore you guys with fundamentals. I know you guys are here to just look at trades and identify trade setups, but it seems as if across futures markets, we're in the red. We're seeing futures trade lower. Let me just remove this. What's going on? I don't know why this. Okay, yeah, here. We're seeing futures. Let me just go to the S&P E-mini, which is just our traditional benchmark. But we can see that slightly negative. It's trading lower for today. It's not too much lower, but it's still soft. This is your Monday, so traders are still trying to come back into the routine of things from the holiday week. We had an extended weekend due to the Thanksgiving holiday, and we're seeing still thinner liquidity conditions, but this is typical of Monday. And we're seeing that pullback or that sell-off among US futures, and we're seeing it across also other global indices as well. Like even European futures sold off, and European indices are in the negative, in the red. But it seems as if today there seems to be this preference towards risk aversion. We're seeing gold pick up as a safe haven. It seems as if there's gold is the luster in gold is returning as traders want to move out of digital assets and move into more of your traditional legacy gold havens. So then that's kind of what we're seeing for today. But we can't just look at one day and come and say this is exactly what it is. We got to wait for U.S. markets to open up, and if we see those same themes and narratives maintained throughout the U.S. session, then it's safe to say that this is a day of risk aversion, and we're seeing gold being the preferred safe haven for now. But yeah, that's pretty much it. What I'm going to do, I'm going to return these charts back to normal. Let's see. Right here, I think this is, I know, you can change it, but yeah, I think that's it. So yeah, I'm just gonna hand the mic back over to Melvin, and he can actually do the rest. No, I mean, you can do it if you want. No, I didn't. He asked that I go to FinViz. No, I didn't go to FinViz because we already saw the futures. And we talked about a lot of the instruments already, and we saw the spectrum. So then, I just wanted to do something different today. But you guys can go to FinViz on your own. We pretty much talked about each of those charts, those heat maps, but more so looked at price to sort of define what's going on. But if Melvin wants to, if you want to do it, you could.
No, it's fine.
Yep. All right. But yeah. One thing I know Marvin showed you his version of the strength index based on gold, but sometimes it's good just to cross check it, just to see, okay, are these agreeing? So you can go to FinWiz and look at the other chart to see if they're agreeing. But for the most part, that's another topic. Let's talk about a few assets. And should I talk about gold? Well, first, let me talk about the Nasdaq. Let me go and talk about that first. Let me first go to, let's go to the weekly chart. And then we're going to do NDQ. Oh yeah, I was gonna say, yeah, for that CAD yen trade, like it stopped us out, but it looks like it wants to respect that zone of demand. So there may be an opportunity to get in on another buy, but if you do so, it's risky. I just wanted to say that for CAD yen. But all right. So yeah, here's the Nasdaq. We're looking at the weekly chart, and remember we talked about this bullish flag pattern. We have the flagpole. We have this complex correction, which is really a descending channel. And what we're anticipating is price reaching this area right around here. That's what we're anticipating, because usually when you get a bullish flag, you have this symmetrical move from here, which is the flagpole. And I might as well just let me just clone this to keep it on there. So we have that flagpole, and we put it at the end of the flag. And what we can't assume is that price is going to go to this area. But to play it safe, we can at least maybe target this area of structure right here. So we're pretty much bullish on the Nasdaq, and I think I mentioned this last week, really for the past 2 weeks. I mentioned how we should be more bullish the Nasdaq, because based on this chart setup, we're anticipating a continuation of this move to the upside, because that's what a bullish flag pattern is. It's a bullish continuation pattern, which means that price should continue in that direction. And sometimes there's anomalies when it doesn't happen. So you just have to know when to shift and adjust. And if you're already in a buy, then make sure you use good risk management and close out with smaller losses if you are in a loss. But we're bullish on the weekly. And if you go down to the daily chart, what do we see on the daily? We see that we're still bullish on the daily chart. Price is just in a period of consolidation now. We can see this clearly by looking at these candles. You see, for the last few days, price has really been trapped in a range, starting with Monday of last week, which makes sense because, really we can go even further, really the 15th. Because you can consider this whole area the range from, let me just draw it out, from this low right here all the way up to these highs right here. You can say that price has really been in a tight range, but recently, especially last week, we can see these sideways moving candles. Starting from Monday of last week, sideways moving candles, which makes a lot of sense because, as you guys know, it was a holiday week. Of course, it was Thanksgiving in the States, and U.S. banks, there wasn't that much activity. Just know that. So then this is the reason why we see consolidation or range bound activity. But if you were trading the smaller time frames, they will be more significant moves. But whenever we see price slowing down like this, it can mean either one or two things. It can mean either price is going to reverse and head lower. In other words, it could head lower and create a correction to the downside, or it could be consolidating for a potential break to the upside and a pullback and up. Because what we see on the weekly chart is that we still have room to go on that bullish flag pattern. We still haven't reached that target yet. So then our bias is still to the upside. So then we're going to look for opportunities to buy primarily. But for the most part, we do see this range bound activity. As a matter of fact, let me also do this. Let me just draw this in as well, because we cannot ignore this zone right here. Let me make this orange. All right. So we have that. And what we're going to do from here, we're going to drop down to the 4-hour. And on the 4-hour, you can see this consolidation a bit better. Price formed what appears to be a double top, but it looks like it still wants to respect these lows. So, we can see another push to the upside that retest these highs. I mean, that could very well happen for today. And in order to get more clarity on that, we can definitely look at our other time frames. So then let's go down to the 1 hour and see how this move is taking place. Because based on what I see from here, we can see price push higher and at least get to this area, right around here. At least get here. But yeah, let's drop down to the 1 hour. So go down to the 1 hour. And we can see that price has somewhat of a bearish environment, but it's definitely created this bullish move where we see price break these lows right here, the previous low. So whenever you do see that, then what you can expect is for price to come down, test this area, and then maybe give us another push higher. So then that is what I'm looking at for the Nasdaq. I'm expecting a move like this, where you'll see price correct to this area. Let me just draw it in, because this area will be an area of demand. You'll see price correct to this area of demand. And then you'll see a reaction from this level. That's just what I think is going to happen. I could be wrong, but that's my bias because of that bullish flag pattern. We strictly want to look for buys. So we're going to stay on the buy side and look for opportunities to buy whenever price reaches a demand zone. So again, for the Nasdaq, this is what I'm going to do. I'm going to wait for price to come down into this zone right here. And then from there, I'll look for an opportunity to buy on bullish confirmation and possibly trade it up to these highs up here or around here, maybe even smaller, just to play it safe. But yeah, this is the Nasdaq. This is how we're approaching it from a top-down perspective or point of view. We know on the weekly that we should see an expansion to the upside, so then we want to look for buys. And that's what we're looking for right now, is a buy on the Nasdaq. All right. So yeah, are there any questions on the Nasdaq before we move forward? Going once, going twice. Okay. Let me do one more. Let me look at gold. Actually, I will be looking at this for the first time because lately I haven't been paying attention to gold. Gold is one of those assets or pairs that could be hard to read at times. So I know Marvin was looking at it, but I prefer not to really spend too much time trading it. But for the most part, I want to do whatever I can to help you guys. I know some of you guys like trading gold, so then we're going to cover it, briefly right now. So, all right. So then what we see here, we see price definitely in a phase of indecision, and really for a period of time has been trapped within a larger range. We could probably see that range a little bit better on the monthly, but on the monthly we see price come down, push up, test the highs, come down, push past the lows, create this V bottom formation. So we can see this V bottom. Then price pulled back to demand, and now we're heading up. So then our buys with gold is to the upside. That's our buys right now, based on what we see with the monthly. I know we're in this critical zone, but we're going to stay on that side. If you go to the weekly, same thing. We're still in this bullish environment. We want to look for opportunities to buy. So yeah. Let me go to the daily, because we already know the weekly is bullish. Let's go to the daily. Daily's looking bullish as well. And we do have these zones that you should look for or pay attention to. But yeah, let's go down to the 4 hour and then the 1 hour just to see what we would do. Okay, so then this is the 4 hour. So then from here, you can just list a particular area of demand on the 4 hour. So we could say, hey, based on what we see on the 4 hour, we can expect price to come down to this area of 4 hour demand right here, and then look for an opportunity to buy on this pullback in price, since we're expecting price to push higher anyways. So then again, if price pulls back on the 4-hour to this area of demand, then look to buy. But do we see anything on the 1-hour? Okay, yep. Well, the 1-hour, same area of demand. However, we do have this period of imbalance right here. So we may see prices respect this area of imbalance and then bounce higher. But yeah, I would love to see price give us a full correction all the way down to this zone, but we may not see it. We may just see something like this where price comes down, test the inefficiency zone, and then from there, price pushes higher. And the reason why I think it's going to be a shallow retracement is because we can see how steep the slope is of this 20 simple moving average or 20-hour moving average. When it's really steep like this, then oftentimes you get a shallow retracement, just like the other times. For instance, it's pretty steep, get a shallow sort of retracement and then push up. But whenever price is moving strongly to the upside and the 20 SMA or 20-hour moving average is sloping sharply to the upside, then expect a shallow retracement. So that's what we're expecting in this case, is this small minor pullback to the zone, and then from there we'll look to buy. And we may wait for bullish confirmation. But yeah, this is gold and this is on the 1-hour. So yeah, are there any questions before we move on? Because I think right now I don't really have too much really as far as different pairs or different assets. It was just a typical Monday. I'm not seeing much right now. So I'm just gonna probably end a bit early today or this morning. But if you guys have any questions, if you guys want us to look at a particular asset, please let us know, because we will take the time to go over it right now. If you're having difficulty reading price, or you need help on a particular currency pair or on an asset that you're trading, just let us know. There's no harm in getting a second set of eyeballs on that particular asset, just to see if the technicals agree. If your technicals agree with my technicals. But if we don't have any questions, I guess we could end pretty early. Thank you guys so much for coming to today's session. We really do appreciate you guys. And as we always say, remember to always count your blessings, not your pips. And we'll talk to you soon. We'll definitely talk to you soon. We'll keep you posted on how everything looks. And but yeah, it looks like well, we'll see. We won't know for sure how price is going to be until the New York session opens. And then once we see that, then we'll know, okay, we'll know exactly how to trade the Nasdaq or the Dow, and even trade some of these other instruments or assets. But yeah, that's pretty much it. But thanks again for coming. We really do appreciate you guys. And as we always say, and let me say it again, remember to count your blessings, not your pips. And we will talk to you soon. All right. Talk to you guys later. All right. Goodbye.